Hey, this is Mitchell from Option Wolf. Today we're going to be going over long calls and long puts. This is going to be a very basic video. We'll go over this stuff in more detail in some other videos, but let's just go ahead and dive right in here. So basically, what is premium? Premium's how much you're paying for this option contract. You got calls and puts, so just like stock, premium has a bid or an ask spread. In our anatomy of an option video, we talk about strike price, premium, and some other factors. A strike price is the price at which you have the right to buy or sell. So you're buying if it's a call, you're selling if it's a put, and then you have in the money options and out of the money options. So on calls, one call is the right to buy 100 shares of XYZ at your strike price. In this example, it's 10. So this means you're bullish. You're betting that the stock is going to go up. There's some risk factors, as with anything trading. So risk of inflated prices, perhaps due to earnings, increased implied volatility. There's a multitude of things that can affect the price. Risk of adjusted options. This is something we'll cover in another video. It's not something you really need to concern yourself with at this point. So basically you're betting, will this stock move this far up, being that it's a call, by this date? So if you have buy 100 shares XYZ at $10 for August 2018, you're betting that that stock is going to be at or above $10 by that expiration date. So long term versus short term, there's obviously a multitude of expiration dates to choose from when trading options. Short term is going to be a little more volatile, have a lot more time deterioration. Basically, we're betting on the odds something moves in the money or further into the money, depending on where we open it. But we're making educated guesses here. We're not gambling, so make sure you sign up so you can see our technical analysis videos and see how we make these moves. And we can even perhaps provide you with a personal consultation in your personal trading account. Now, puts, opposite of calls. You're bearish on the stock, you're betting it's going to go down. So puts are great because it's a way for you to make money when the market is coming down or when the underlying stock is coming down. Puts, in my experience, move quicker. Naturally, they have a higher vega, implied volatility. So people sell a lot faster than people buy in a lot of cases, just basic fear versus greed. Once something starts dropping, you already got a position locked in. You make a lot of money there. But it's fun to hedge your current positions as well and make money doing it. And it's just as easy, if not easier, to make money on the way down. And this really, a lot of people don't do this, but it'll give you an edge against everybody else. And that's what we're looking for when we trade. So as discussed previously, we got exponential profit loss potential. You can make a lot of money, you can lose a lot of money. It's fast money, but you just want to make sure you do it right. So naturally too, with options, you're going to need a high risk tolerance. It's a risky product, and risk is where the money's made. You don't make money by being safe. You make money by taking risks. So you have to be able to tolerate wide swings in your position. You have to be able to tolerate seeing some red a little bit sometimes and holding out until you move in the black. So personal story of mine, when I first started trading options, honestly, I knew kind of what I was doing, but you're always learning more and more about options. I turned $1,100 into $15,000 in 3 weeks. But I've also lost $10,000 essentially overnight. So you have to make sure you're not using emotion. You're trading like a robot. And once you start seeing that money come in, you don't really think of it as real money. It's kind of hard to explain, but it kind of gets to a point where you think of it as points in a game. It's not real money until it's cash in your hand. But our goal here is to make money when the market goes up and down, so we can ride that wave and make money the whole time doing it. But that's basically a brief synopsis of long calls and long puts. We're going to get into a lot more detail in our other videos, so make sure you subscribe. Have a good day.